Institutional investors are dumping their Chinese stocks, and you've seen their prices just completely plummet 5, 10, 20% in just the last few days. And so investors are wondering, why are they dumping? Which investors are dumping their stocks? For example, Kathy Wood is one of the institutions that's been dumping it. We'll talk about why she's been dumping it, what she's articulated, at least recently. And folks are wondering, well, wait a second, as you see something drop 5, 10, 20%, people actually treat stocks differently than they do with commodities or basic goods that they might need. And this is something Warren Buffett has routinely talked about, where, if a price of a cheeseburger dropped by 20%, you'd be happy because now you could buy more and it's more affordable. Whereas with stocks, generally people, it's a social dynamic. You see something drop by 20%, and then you're like, well, something must be wrong with it. And so here it is in this video. We're going to try to parse out, is there something wrong with it that's permanently impaired these businesses, or what's been the latest news that's caused this sell-off, something to consider. And if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Ideally, when you find a potential unrivaled investment, it's also at a compelling valuation, because as Chris Mayer talked about in the book that I'm pointing at right there, 100 Baggers, you want dual growth engines for when you find a stock. You want the growth of the business. Also, if you can get the growth of valuation over time, that can drive significant returns over a multi-year perspective. So ideally, you find these things at compelling valuations as well. That said, let's talk about what's going on with these Chinese stocks, and particularly with Kathy Wood, and then the latest news in terms of regulatory clampdown. And so here it is, Carl from CNBC talking about how Kathy Wood is exiting Chinese stocks, getting rid of her shares in the tech behemoth Tencent, as well as the property site KE Holdings, every single day last week selling. So ARK is dumping shares. And here it is, about 2 weeks back, Kathy Wood sells Chinese tech stocks, warning of valuation reset. So she was right to call this out as saying, hey, I effectively think there's a valuation reset going on. But this, it's an interesting perspective, and I'll add, my 2 cents to it in a second. But she says, from a valuation point of view, these stocks have come down, and again, from a valuation point of view, probably will remain down. And from my perspective, talking about selling something because the valuation is starting to go down, or valuation has gone down, and saying I'm going to sell because that valuation has gone down, that seems like a very circular thought process. It doesn't sound like, well, wait a second, the fundamentals should be what drives it down. Like if you have, let's say, 3 different components that drive your returns as an investor, and there are 3 components. There's the cash that you get, there's the valuation, then the changes in that valuation, and then there's the underlying fundamentals. And people forget that those things can work against each other. They can all work at the same time. Those things drive your return over time. And a perfect example that I love to cite for investors is how Microsoft stock, after it fell something like 40% after the dot-com bubble peaked. So after it burst, it fell 40%, and then it proceeded to go nowhere over the ensuing decade as their earnings grew by 4x in the ensuing decade, yet the valuation still fell by 75%. So that those 2 things offset each other such that you had virtually flat returns over the ensuing decade. That's the reason why you need to consider valuation plus the fundamentals, and that's why every company, I'm always talking about it. You can't just look at companies in a vacuum regardless of valuation. And so for Kathy Wood to say, wait a second, I'm selling this because the valuation is low and going to stay low, or might go lower, I look at that and sort of saying, well, wait a second, valuation has gotten hammered. You've seen it over the last few days. So if you say, hey, I think investors will just want a lower valuation in the future, okay. But keep in mind, a good chunk of your thesis also should be, what's the fundamentals? What is the fundamentals going to be growing? And so, for example, I own a basket of Chinese stocks, one of which is Alibaba, and I've talked about that repeatedly. And here it is. I wouldn't own Alibaba if I didn't think there would be core fundamental growth over time. And so that's what I mean. So the lower the valuation, it actually turns into a potential tailwind. And so that sort of circular logic of, yeah, it's a lower valuation, therefore I'm selling, it just doesn't make any sense to me. If you have thoughts, I'd love to hear it in the commentary below. Like, okay, so the valuation can stay low over time, but you should still, as a shareholder, if the share price stays flat, let's say over 5 years, and each year it's, the business is growing somewhere between 10 and 20% a year, that means each year the stock price is getting cheaper by 10 to 20%. So that's the question of like, okay, so if the valuation multiple stays the same, then it should increase by whatever the fundamentals increase by, which arguably might be for Alibaba, somewhere between 10 and 20% a year, maybe even more, potentially a lot more. And so that's something to think about. I've done a full deep dive on Alibaba if you're interested in hearing that. So I don't really agree with this circular logic. That said, for the last few weeks, it's been right to say, hey, I'm selling it because valuations are coming down. Maybe they'll get lower. So why the further collapse recently, where we've seen huge drops in some of these tech behemoths, these Chinese tech behemoths? And so first of all, I did call out in the most recent, on Friday a few days ago, China puke and what was going on. That was particularly focused on the for-profit education / tutoring sector. Then, as if the CCP didn't want you to get a chance to just breathe and walk that off, over the weekend, a slew of more initiatives came out, such that Tencent's exclusive music deal, where they're effectively saying, hey, the Chinese State Administration for Market Regulation has ordered Tencent to end its exclusive music licensing deals with global record labels. So this is a crackdown on Tencent's music streaming business, effectively saying, hey, you can't have these exclusive deals with these global record labels. And so then investors sort of said, oh man, this is going to crush Tencent music. But then let's actually look at the details a little bit. And so here it is, the fine tied to this. And keep in mind, this is part of the CCP's broader anti-monopoly initiative, saying we don't want businesses that have monopolistic powers. And so they slapped Tencent with a $77,000 fine. This is a company that makes tens of billions of dollars in profit a year. So, $77,000 fine. This is, a flea in terms of the Tencent size. So Tencent, however, will be able to retain its exclusive deals with independent artists. So not the global, labels, but with independent artists, they can still retain these exclusive deals. And they talk about how while the end of the exclusive licenses is considered a boon for the entire music streaming market in China, analysts do not expect a shakeup in the sector because Tencent's apps have already built a significant lead through the years. So yes, one could argue this does weaken Tencent Music's business competitive advantage or their moat. So you could argue their music segment might grow at a slower rate in the future. And one could argue, yes, this is part of a rational framework that the CCP had. This is not just flim-flam approach. It's sort of saying, hey, we're taking an anti-monopoly approach. Is it a big deal? I'm looking at the fines. I'm looking at, that it's not like they're breaking it up. They're just saying, hey, you're not going to be able to just completely crush the competition with exclusive deals. So you're still probably going to be a top player over time. And that's generally the consensus with the sell side. So then a bunch of other initiatives as well, such as where here it is, the Chinese market regulator improves protection of food delivery workers. This is a common complaint that you've seen with Uber drivers, Lyft drivers saying, hey, folks have been underpaid. And that's the same sort of thing here. This is with China, it's all about making sure that you minimize potential social chaos, making sure people broadly are pleased, that you don't have large groups of the population that would look for some sort of turnover in leadership. And so here it is, it's about improving the delivery workers, minimum wages, making sure that they're getting social insurance, delivery deadlines, making sure that their standard of living is above, sort of a minimum wage, that they're getting what's appropriate for them at least. And they also announced, here it is today, China launched a special campaign to regulate its internet sector. And I'd argue this is the headline that really got knocked the wind out of Tencent in particular, where it dropped about 10%. But you could see there's a lot of news coming out of here, a lot of punches being thrown. And this last one, so China has launched a special 6-month campaign to regulate its internet industry. That alone, shaking folks up. How the ministry will crack down on malicious internet company practices that could disrupt market order, such as link blocking activities and interference in products and services operated by other entities. In the interest of data security, the ministry will target companies that have not taken management and technical measures as required in the collection, transmission, and storage of data and offering the data to other entities. So the way I look at this is this link blocking activities and interference in products and services. The way I understand this, at least has been called out by a few different people online, is this is sort of targeting Tencent. They have this they have this huge platform in China, and effectively they have this super app where you have a bunch of in-apps, mini apps in there that get access to their core platform, Tencent's core platform. And so that you're talking about WeChat here. And so if, let's say, Alibaba wanted to have access Tencent in the past would sort of say, nope, you're not allowed to have your mini app on this store. That makes it harder to grow new customers. And so this is part of the reason you should check out if you're interested. I did a whole video on this called Tencent Kingmaker about how because Tencent operated this app that has over 1 billion users, that they effectively could become a kingmaker by saying, hey, we know what people are interested in, therefore we are going to enable and we're going to invest in the companies that we enable on our app. And so the thought process is maybe this creates, if you create sort of a level playing field where any app can list, including Alibaba's, who's sort of viewed as a top competitor to Tencent, if Alibaba can list their, let's say, e-commerce apps on Tencent, then now Alibaba can potentially grow even faster. So maybe this is actually a net positive for Alibaba, even though the fact is that it dropped, like 6 to 8%, just today, and dropped significantly closer to 20% over the last few days. So you're looking at that and you're like, this might actually be a net positive for Alibaba, maybe a net negative for the investments that Tencent has made, as they now have to compete. The apps that Tencent has backed may have to compete more directly head on with the Alibaba apps. But it's also possible no one really knows exactly how this shakes out, because it becomes a question of like, well, wait a second, how much data is Tencent going to have? Does Alibaba even want to have an app on there when Tencent's going to be able to see what sort of traffic is flowing through that, and how much and what level of detail would they be able to see? And the questions of like, yeah, which apps have been aggregating too much data? Have they been making it clear to the users, what data they're going to be taking? So that sort of concern, I think, is broadly sweeping, whereas the link blocking and sort of saying, hey, who has access to this, that I think is targeted more at Tencent. At least that's based on several commentators, and the logic makes sense there. That could be a problem for them, or at least could level the playing field from an e-commerce perspective. And so, so then the next question is, well, okay, so what am I doing when I consider all this? I'm going to do a quick plug, if you will. Once again, if this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing. I'm looking for potential multi-baggers, stocks that potentially go up hundreds or thousands of percent over time. If you want to follow my personal journey as I look to buy and call out these potential multi-baggers, go to unrivaledinvesting.com. I have weekly updates. First week of the month, I call out my full portfolio. Once a month, I call out what I think is a potential multi-bagger. So that's at unrivaledinvesting.com. Let's get back into what am I considering as I look at all this Chinese noise, the Chinese stocks. And there was a great quote that I saw earlier today, and it was actually from several years ago when Warren Buffett was being interviewed about the great financial crisis in 2008, where he talked about the fog. And he said, when you have, there's the fog of war that Robert McNamara had talked about, but there's also the fog of a panic. And in the fog of panic, you have the same sort of thing where you don't have complete information. There's a lot of news. There's a lot of headlines coming out. And people just, the panic sort of starts taking on its own power. And people just start selling because of that sort of panic. And so in investing, you never have perfect information. And one should recognize, okay, there is going to be this fog right now. There's a lot of uncertainty about what's going on with Chinese stocks. And this fog starts creating its own power, as I said. It starts creating its own sort of spiral, because then people start getting concerned about headlines that aren't even really top headlines. For example, one item that I've seen pick up a lot on various different social media platforms is how it's like, oh man, the China, VIE structure, variable interest entity structure, now that's going to be underway, and now the CCP is going to review that, and all these companies that are already listed, they might go to zero because China might say, hey, this VIE structure is illegal. And so this is an example of how in the fog of panic, investors start worrying about additional threats. But the reality is, if you read the articles of the last few weeks, there's no mention of really resetting these legal structures for existing companies. What you see very clearly is that China's saying, hey, we want to revisit how we IPO companies going forward. Like, we want to make sure, like, going forward, do we really want companies listed on the US? And from a geopolitical perspective, when they see the risk that you might have a fickle US president say, hey, we're going to delist all these guys, China doesn't want to be in a position where they're saying, well, wait a second, you're doing something to us. Why don't we proactively figure out how we want to play this IPO game going forward? And so that means, hey, let's list it on the Hong Kong exchange, where we could say that's the global platform that we're looking at now for global investors. And so that's, in my opinion, that's really what's considering right now. I'm not really seeing headlines in any of the Chinese mouthpieces, the newspapers like the South China Morning Post, saying like, yeah, all these major companies that have listed, like Tencent, Alibaba, these companies are going to be, their legal structure and all these shareholders are going to get wiped out. That is not what the CCP is sort of telegraphing here. They're just saying, hey, we're going to revisit how IPOs are done going forward, particularly for these global companies. But that gets back to Warren Buffett's point of like in the fog, panic starts taking on its own powers. Panic starts getting its own influence, its own momentum. And so one should understand, okay, right now it seems like we are a little bit in a fog of panic as investors are worried, man, could this just be a big donut? And so for me personally, to answer that question, we've talked about Kathy Wood, how she's been selling, talking about valuation, and that's the reason why she's selling. That logic doesn't really make sense. Maybe she anticipated this, and that's really what's going on, but she didn't disclose it. And we understand now why things have fallen more, because I talked about how not only did you have the tightening of the education sector, but then you had a slew of other initiatives that were called out. And so this is a lot for investors to digest. And investors start worrying, oh man, the CCP is going to crush businesses. That's the panic. The panic starts taking over, that the fears start building. Whether or not it's justified, that's another story, and that's the fog of panic. And so, me personally, as I look at this, I still own my basket of Chinese stocks. It's about 25% of my portfolio. I've done that deep dive on Alibaba where I thought, hey, this valuation does strike me as compelling. I do own the Hong Kong listed shares. Now, could I be wrong? Of course I could be wrong. Of course something could happen where, these continue to fall, they're not competitive, or maybe, the worst case does play out. I really don't think that's the case because, with like the VIE structures getting wiped out or something like that. I just don't think that's the case because the CCP, which I called out on my last video on like the China puke video with the education sector. I think these are the golden geese of China's economy that has literally raised millions, tens of millions, hundreds of millions out of poverty over time. And this is revolutionizing their economy. I mean, Xi Jinping just last year was talking about effectively how proud he was of e-commerce. So I view this as let's regulate this sector to make sure that it continues to grow, let's say, in a productive way and it doesn't go off the rails. That's how I'm thinking about it. So I'm really sitting tight and I'm focused on the quarterly results. I'm focused on, hey, let's see these companies compound. Because I'm viewing, okay, long term, if I'm looking at growth stocks, usually valuation is actually a headwind. Valuation comes down, but you have a lot of growth. And so maybe that growth can more than offset that valuation decline. And so now, as I'm looking at several of these Chinese companies, and Alibaba is part of this 25% basket for my portfolio, I'm thinking, wow, valuation's really taken a hit, and I'm still thinking these businesses can grow, let's say 15 to 25% a year for the years ahead. That's how I think. I mean, I think these are world-class businesses, some of them. At least the ones that I've called out, at Unrivaled Investing, or my Journey subscribers know, like, hey, I think this is world-class business, or this business trades below liquidation value, that type of thing. And so I'm looking at this and I'm thinking, man, not only might I get the underlying business fundamental growth, but there's a chance I also get that valuation expansion as well, which could be a 1-2 punch and deliver really great returns. So that's my take, and that's the reason why I'm not selling. I'm not saying, hey, valuation's gone down, therefore I should sell. That argument makes zero sense to me. Could I be wrong? Once again, of course I can. And as I've already mentioned, full disclosure, I own the Alibaba Hong Kong shares. And, if you have thoughts on how this whole situation is playing out, including the additional regulatory risks that I called out, please leave a comment below. If you think, Daniel, you've lost your mind, you shouldn't own 25% of your portfolio in Chinese related stocks, I'd love to hear it. I want to hear the devil's advocate view of what I'm doing wrong, because right now, in all honesty, the way I'm looking at it is, yes, short-term bumpy, yes, it's not fun, but you know what, you do this enough times and you're like, all right, this is the game, folks. Like, as I mentioned before, regular viewers know one of my largest positions for me when I was younger was a stock that dropped 70% in one day. And I was just like, oh my gosh. So like, this is a volatility. Of course it's not comfortable. It's not fun to see like, oh man, my portfolio is down 1 to 2% today and the market's up a little bit. Like, oh, phooey. But that's the reason why it's so important. This is why I call it out in Unrivaled Investing, is I call it a journey. And everyone needs to figure out a journey that's appropriate for them. You got to focus on what's right for you. And for me, this just feels right to me. I look at this portfolio, this basket of Chinese stocks, and I'm like, unless the CCP kills these businesses, I just, it seems like they could double over the next 3 to 5 years on the downside case. And then maybe a lot more if sentiment changes, like if you get that valuation expansion. So that's how I'm looking at it. Love to hear your thoughts. If you think there's other unrivaled companies out there that have a compelling valuation, that's the challenge. If, or maybe even just a fair valuation, please leave it in the comments below, because I'm looking for additional stocks that I should be, following up on in terms of next videos. And always leave a thought on not only the name of the company, but why you think it's unrivaled. If this video has been helpful for you, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.